Hey guys, you're live with us at Moneycontrol. I'm Manisha Gupta, and the commodity markets have been quite volatile in the recent few days. I'll start with the crude oil prices because we're trading at a 5-month lows onto this one. Actually, in the last couple of months, we've come down all the way from nearly 96 to almost 76 on the lower side, and there is a huge amount of volatility that we've seen in metals as well. Let's put some limelight on all of this, and for that, we are joined now by Kunal Shah from Nirmal Bang. Kunal, hi, thank you so much for joining us. I'll start with crude, and we've seen volatility, constant declines, and the markets believing that we are not yet done with this downside correction. What's your own view?
Well, when it comes to crude oil, it's all about the highlight for the crude oil is the weak compliance from the OPEC. We have seen OPEC compliance clearly weakening in this last meeting of OPEC, and even before that, before the OPEC meeting, we've seen some of the OPEC plus members have already started to raise their production. So when this kind of phenomenon takes place, no matter how much OPEC try to convince the market that they are going to cut the output by 2 million barrels, markets are not listening to it. So the fact is that at this point, market needs something really big for it to move up. So the only positive thing in the market right now is US oil demand. So US oil demand is basically going to pick up, and US is filling up its oil reserves. So I think these are the factors. This is the factor which is going to play a rebalancing role in oil market. Second, global economy seems to be slowing down with the quantitative tightening by the Western central bankers, and that seems to be weighing on oil prices. So to sum it up all, I think the bottom of oil should be somewhere between $65 to $68. That should be the bottom for WTI, and for Brent, 70 should be the bottom. Going forward, the most important thing to see will be what is happening with the US oil production next year, going into 2024. Whether the US oil production start declining, and if that take place, I'm pretty confident that oil market will get a lot of support. Second, what are the steps China is taking? China is the second largest consumer of oil after US. And if there is a revival in China's growth story, growth momentum economy, then also it can lend support to oil. So it seems that oil is, the downside from here is $3-4, not more than that. All the negative news flow have been priced in oil right now. And we need big triggers for oil to move up. So something like, US oil production declining by 500,000 barrel or 1 million barrel, that kind of trigger could really flare up the oil prices. So, or the major geopolitical event in key oil producing regions. So I think 66, 67 is the buying zone, and upside is capped till $82, $84. We are not going to see anything above that. But on the downside, I believe that 66, 65, you should tighten up your belt because all the negative news flow have been priced in at those levels.
All right. So further decline not ruled out, and buying on dips perhaps is a strategy right now in case of crude. But that's about the energy markets. We've seen such huge volatile moves come in for the gold prices, Kunal. I mean, not something that the markets see very often, but this week clearly has broken all of those barriers with $50 to $100 of a move coming in matter of day. How are you looking at these current prices? I mean, we've done a big spike up and then that correction. One, how are you reading it, and what would you tell investors?
I read the correction in gold from the highs of 2140.50 to 2040 is a healthy correction. So gold prices have rallied from $1810 to $2150. So when you talk from the $300 upside move, what we witnessed from the lows of the September when the bond yield surged in the US, and we saw gold prices made a low of $1820. So it's a healthy profit taking in the structural bull run of gold. Because right now, the only reason why gold is still not able to really break out all the barriers is there is a lack of support from the ETF investors. So the moment, there is a clear indication from the Federal Reserve that they are going to cut the interest rate, at that time, US investors will start accumulating gold ETFs. or the European investors or the UK. So right now, the ETF community globally, not in India, is quite, the buying from the ETF community is quite muted, and there is a constant outflow from the gold ETF from the last 6-7 months. This trend is likely to change going forward. And I believe that any dip to $2,000 or in India, any dip towards 61,000 rupee, I think it's an amazing buying opportunity because I'm expecting gold to test $2,400 next year in 2024. And on Indian basis, it should test 69,000 rupees conservatively.
All right, so good gains continuing in case of gold prices, but with the kind of run-up that we've seen in case of gold, Kunal, that has been what we've seen in case of silver as well. A smaller commodity, more volatile clearly, but it has been breaking its resistance levels for some time now, obviously getting stuck at 26 at this point in time. But what's your sense on that?
Silver is looking very bullish fundamentally. So generally what I've seen in silver is varied from 66,000 to 70,000. So it's a 22-24% in silver from the lows of September. So it is bound to correct. It is bound to consolidate. We are not going to see one straight line directly towards 84. It's going to be a zigzag and then eventually a big up move. The fundamentals are bullish. Silver markets is in a huge deficit from last 2 years. 200 million ounce of deficit is quite a big number for silver, and I think that's taking place from 2 years. So silver prices are poised to test $28 to $38 in 2024, and Indian bourses it is likely to test 84 to 85,000 rupees. These both are my conservative targets.
All right. Thank you so much for that, Kunal. For some more correction expected in case of crude oil prices. But as far as gold and silver go, well, it is buying on all dips. More highs expected in 2024 as we move ahead from here.